Hi, family and friends. It's TRUEsday Tuesday. Today, I'm going to talk about really just getting a financial plan together and really seeing where you're at right now. And this is going to help determine what type of life insurance needs that you have and what ways life insurance can really fill in those gaps and help you along your way. So, when it comes to planning for your retirement, for your children's college education, just for life, period. There's so many benefits that come along with life insurance. And a lot of people just really believe that life insurance is for when you die. And that's not true. That's completely not true. I want you guys to get that out of your mind and really pull into the fact that your planning, preparation, is going to just really help you along your way. So I'm going to share um, a financial planning document with you guys. This is just really can help you narrow in what you need to look at and how you can, and some questions that you have just to really help lay out that path for you. So this is a financial blueprint workbook. So will help you create a blueprint so you'll know and you can look at where you're at, where you want to be, and what you will need in case of something were to happen to you as far as injury, say if you have a stroke, heart attack, anything like that, or even if you die, where you're at now and what you want to happen with your family and with yourself in that situation if something was to occur. So first of all, we need to know where we are at right now. So this is creating a blueprint that's just for you and planning for your financial future. So first and foremost, you're going to start with your family information and your employer. You're going to ask some of the questions you just want to really look at is what type of work do you currently do? How confident are you about your career outlook? And when do you plan to retire? And what else do you dream of achieving in your life? So these are things you want to look at. It's going to help you. Then you're going to put down if you have any children, if you don't have any children, if you plan on having children, or if you want to adopt, or if you already have adopted, this is something where you would want to put this dependent information at. And also, you want to take in consideration, are there other people who depend on you financially, such as your parents or your grandparents? If there's other people that depend on you, and if something was to happen to them, they're going to pass away. If your family is looking at you to take care of that financial responsibility, this is the location where you want to put that information because something you want to take in consideration if those expenses are going to roll over to you. So, do you have any dependents with special needs? And if so, what type of special needs do they have? And what requirements, as far as financially, are you responsible for? So, you will put that here with the dependent information, along with your mortgage. If you have a mortgage, if you're paying overpayments in your mortgage, you would want to put that as well. There's not a spot right on here, but I would just put it off to the side. So if your mortgage is a certain amount, but you're making overpayments, you want to definitely include those overpayments. And then also your retirement funds. What type of retirements do you have, and what are you doing to prepare for your future for your retirement? Any type of investment accounts you want to write down. So, what is your current savings strategy for your retirement if you have one? If you don't have one, you definitely want to put one in place. Are you comfortable with the amount of money that you've set aside for retirement? If not, what is your retirement goal? So, these are questions that you want to ask, and what is most important to you in your life? And when you do invest your money, which degree of risk are you most comfortable with? Do you want to go with something that's going to have a high, low, or somewhere in between? So then you will put your current expenses. You want to write down what it is now, what it is annually, and what is your current strategy for handling these expenses. So when did you last review your expenses and look at for ways to reduce or cut costs? And are there going to be any changes you want to make to your current budget? So do you have an emergency fund that can cover at least 36 months of expenses? Now, this is gonna help you as far as, say, if you did have a stroke, you did say you had a heart attack. These the things happen unexpectedly. This is something that you're not going to plan for, but if you're prepared for it, it can definitely help you. And this is something you want to take in consideration when you're setting up your life insurance, when you're creating your own bank with your life insurance policies. These are things that you want to take into consideration. And here, right here, most important, the survivor needs. So, what do the people that depend on you need if you were not to be here? We love our children, we love our family. And of course, if we're taking care of them, even if we're not here, we want to still continue to be able to take care of, do something to help them. We don't want to just leave them high and dry. Okay, so what kinds of insurance coverage do you already have? And then how confident are you that your current life insurance strategy will meet your family's needs? And then do you currently, what are some of your habits that could impact your life insurance? Like, do you currently use tobacco, or or any of your other family members have any special um, conditions, like health conditions or interests that could impact your insurance spending? So the cost to raise a child from birth 18 is $272,049. So if something was to happen to you, I mean, this is kind of ballpark. People say, how much insurance should I get? So you're going to take all of this into consideration. And if you have a child or if you're planning to have children, you want to take that into consideration when you're setting up your financial plan. And also college, when your child is gonna go, prepare to go off to college, or if they're gonna prepare to be an entrepreneur, have their own business. What kind of educational opportunities have you had in your life? And what experiences have you had, whether negative or positive, that you want to make sure your child is going to be, safe from those decisions? So, what is the status of your college savings plan, if it is just for yourself? And would you like to contribute to the educational needs of your children or grandchildren? A lot of grandparents play a huge role in the support of making sure that their grandkids have the opportunity to go to college, especially if they did not have that same opportunity. So this is something that you want to take into consideration as well. So the average annual college cost for public is $27,330 per year. And then for private, it's 54,800. And this is according to collegedata.com. So those costs are going up with inflation, because that's just what happens. As inflation, the college costs, food, living expenses is going to go up, and you're going to need that financial plan in place for college and also for your retirement. So with your retirement, and when you ask yourself, what age do you want to retire, and when will you begin to collect Social Security? One thing we know for sure, Social Security is not going to be enough alone to take care of you financially, especially with inflation, increasing costs, and food, gas, everything. So we just definitely want to make sure that retirement is taken care of. And when you set up your life insurance policies, there's ways to make sure all these areas are taken care of, from the college planning to your retirement, your children's retirement, and just creating your own family bank. So that's going to be your family bank building. So you create that, and you set a plan in place how you want it to be. You don't have to depend on anyone else. So back to the retirements. What does your current strategy include? Are you contributing to maximum to your employer's retirement plan if you're in that contributing period? And would you like to retire earlier or later than originally planned? So if this is something that you want to retire quicker, you definitely want to make sure you have these written down, prepare yourself and prepare your family. Stay ready so you don't got to get ready, right? So what would your ideal retirement look like, and how are you making sure that you won't run out of money in retirement. So let's just look at a couple of the health risks and costs of care. This is just medical realities of today. And so approximately every 40 seconds, an American will have a heart attack. Most everyone knows somebody that had a heart attack, whether someone in your family, coworker, friends, somebody knows somebody, right? Every 40 seconds, someone in the United States has a stroke. Every 65 seconds, someone develops Alzheimer's disease. And out of as far as the heart attacks go, every year 805,000 Americans have a heart attack, and 795,000 people suffer from a stroke. And these strokes and heart attacks does not always end in death. So, but it can leave you where you're not able to maintain your current living and take care of your current financial responsibilities. So that's something you want to take in consideration when you set up your protection. What if I do, have a stroke? What if I do have a heart attack? What can be done? There are things that can be done so you don't have to worry about losing your home or your child not being able to go to college or it just really affecting your retirement in a way where you're not going to be able to survive without, financial assistance. So 6.5 million Americans are age 65 and older are living with Alzheimer's disease, dementia in 2022. And then the cost of care today. So say if something was to happen and you do need long-term care, Medicare pays for $0 for long-term care services. So if you're on Medicare and you're receiving these benefits and you do need this care because you had a stroke or you had a heart attack that did not result in death, it just left you in a state where you're going to need this long-term care services. So do think about that. So beyond 100 days, Medicare will pay nothing. So sometimes it may take longer for us to get through than 100 days. So $108,405 per year goes to nursing home for a private room. That's how much it costs. And then 94,900 per year for a nursing home, semi-private room. So if you want a private room, you're going to pay much higher. If you want to have a semi-private, it's a little lower, but $94,000 to me, that's not 100,000. Okay. And then $54,000 per year is the cost for assisted living facility and $59,488 per year for homemaker services. So if you require someone to come to your home and help you out, you're going to be paying half the price, almost over half the price of what it is if you're in a private room in a nursing home, okay? And then if you just need adult daycare or adult health care, $20,280 per year for adult daycare. So these are things that you want to take in consideration when you were planning for retirement and you're looking at, the possibilities of how am I going to set up this plan? How am I going to make sure that I'm protected and my family is going to be secure? So also, this is just some of the stuff I've already been telling you about. This, if you already have accidental long-term care disability, long-term care, you would put that there. And you want to know if you do have a disability income insurance, what does it cover? You need to know these details. You want to be specific about your life and your well-being. How satisfied are you with your current coverage? And if you got hurt or sick, what would happen to your health insurance retirement plan if you're currently, say, if you have it with your job? Well, if you get sick and you go beyond a certain amount of time, what happens then? Will they still let you maintain it? I mean, what is the process? You want to know this, especially if it's not in your hands. Is this something that they can dispute as far as your job goes? Because some insurance carriers, and when it comes to long-term care or even like workers' compensation, those things can be disputed if it's something that you do not own. And a lot of people are not aware of that. So you also want to look at your family history. If you know you have a family history where maybe your parents have had stroke, they have a genetic condition that it's possible that you may, have that same issue, you want to think about, have they had the same experience and how long of long-term care that they need? And how much do you feel like you would need and know how much it's going to cost? Do you know what the long-term care covers and how much it's going to cost? And how do you plan to pay for long-term care needs? And then other question would be, do you plan to be a caregiver for your parents as they age? Because if you do plan to be their caregiver, if you're not already, this is going to be another expense, another responsibility that you want to make sure is taken care of in your plan. So the cash and income needs analysis, you would just fill in all this information with your final expense fund, a plan to help your survivors pay for funeral costs and medical bills or legal expenses. Like, how much do you want them to put into that portion? A plan to pay off any outstanding bills and credit cards or loans, so that responsibility doesn't roll over to them. And also a fund with money to pay at least 3 to 6 months of expenses during a crisis. So if you do have some type of medical crisis, what is the emergency fund? How are you going to access that? How much do you have in that? And then also with your mortgage, your educational fund, income replacement, and legacy. So this is just all a summary, everything is summarized of what you put in earlier as far as your expenses and where you should be heading or where you plan, to make sure everything's taken care of. And then last page just notes, just anything extra that you feel like you need to include, or anybody. You can write your beneficiaries down here and their contact information as well. And one thing I also want to say is, whenever you do have your beneficiary, please let them know that they are the beneficiary. Let them know what company, you know, who you're going to go with or who needs to be contacted in case a crisis does happen. A lot of times people have no idea if someone passes or someone's critically ill and they can no longer speak or communicate. Nobody knows where to go to get this information to help this person out. So that's all that I have for you today. I know that it was a lot, but I thank you so much. And you guys have a great week. And I'll see you guys next Tuesday.